Money is the most important element when it comes to home buying. What is the best you should expect when it comes to home finance? What all will be included in a home loan? If you already have a loan, is it the right time to switch to another bank now? We get you answers to all your questions on Property Hotline from India's top experts. Welcome to Property Hotline on Magicbricks Now, India's first property business channel with me, Kavita Krishnan. Today is Thursday. We'll be answering all your queries related to home finance. With me in the studio is our expert, Saurabh Sinha, GM Sales at Bank Bazaar. Welcome, Saurabh, to the show.
Thanks, pleasure.
Let's get cracking. There are a lot of questions coming in on home finance, and especially with, the credit policy that's just gone by. People are wondering what to do, I guess. Let's take the first question coming in via email. Vikas has written in. He wants to transfer his home loan from an NBFC to a bank. But for some reason, he says most of his checks bounced. But he has cleared all his dues. Can he transfer this loan now to SBI?
Because you can, of course, transfer your home loan to a bank. Of course, the bank will look at your credit eligibility, which means they will do a CIBIL pull in all probability, which is basically a bureau credit score, which ranges from 300 to 900. So the higher your score, the more your credit eligibility.
Saurabh, sorry to cut
Please.
you there, but can you just break down what is a credit score for our viewers? Especially, do tell us what all goes into your credit score. Is it just your loan repayment record, or are there other conditions which the bank looks at also?
No, so it could be anything from the kind of balances you hold in your various savings accounts, your credit card transactions, your defaults on credit card transactions, your check bounces. Now, check bounces is very relevant to your question. So definitely your credit score has been impacted by the check bounces, which is something the new bank will look at, when they're going to transfer, they're going to issue a loan for you. So all of these parameters actually affect your CIBIL score. And CIBIL is just one of the bureaus. There are two others. There are a total of 3 in the country today.
Right. Also, before we move on, this is quite an interesting question. Now, when you're talking about a credit score, and say, we just saw, he had his checks that were bouncing, which, like you said, impacted the credit score. What do you do if you have a bad or a poor credit score? Can you do something to make it better?
Nothing that can be done immediately overnight. There are no quick fixes there. You will just need to be a customer who then pays on time on his credit card outstanding or loan EMIs. So it's again a function of time and your performance on your
How long before you get a better credit score?
No credit bureau will ever reveal that, right? Because the minute you reveal that, there will be customers who could game the system. It is a proprietary algorithm that the credit bureau runs. But essentially, month on month, all the banks feed it lines of information on every customer. And all of this is aggregated by credit bureaus.
Okay, and very quickly, what happens if I have a poor score and apply for a loan?
You will be declined basis the credit eligibility as per your CIBIL score. That is what will happen immediately. In which case, what you need to just do is approach a different kind of institution, right? Let's say if a private bank is saying no to a loan basis your CIBIL score, you could try it at an NBFC. You could try it at a cooperative bank. Now, a bad CIBIL score doesn't necessarily mean that you will not get a loan. It just means that the bank considers you a risky profile. Hence, there will be always another bank or NBFC which will say, hey, I will give you a loan, but for the additional risk, I will maybe charge a higher interest rate, a lower tenure, a lower exposure amount. So the loan amount itself will be smaller also.
Okay, so that's a key takeaway for coming in for you right at the top of our show. If you intend to take a loan a couple of years down the line, ensure that your credit score is in place, ensure that you're paying all your EMIs, ensure that you're paying all your credit card bills, you're paying all of those on time, Ensure that your checks are not bouncing, because all of this will impact your credit score. It will impact your credit worthiness and whether or not you can get the loan that you want. Right? Let's move on. We have another email query. Manoj has written into us and he wants to know what are the parameters to evaluate refinancing of a home loan in the view of reducing interest rates. Right? Governor Rajan didn't have anything right now in this credit policy, but he did cut policy rates by almost half a percentage point last time.
Right.
A lot of people are trying to do this.
Of course, it's a very valid question. I think every home loan borrower must ask himself. I think some of the critical questions and analysis that a home loan borrower should do at his or her end is find out if they're on a fixed interest rate home loan or a floating interest rate. Now, a fixed interest rate home loan will attract a foreclosure charge or a foreclosure penalty.
Right.
All right. So while you may look at maybe some other bank giving you the same loan at a lower interest rate, there are many other costs involved. Like I mentioned, for a fixed loan interest rate, there's a foreclosure penalty, right? There are other fees like processing fee that the new bank would want to charge you. There will be, let's say, stamp duty. There will be registration fee. There are legal fees, all right? So you need to find out what are the additional costs of doing the loan transfer, see if it is actually going to save you money in the long run, and only then go for a balance transfer. Do not just take that step just because you see the interest rate as lower.
Saurabh, also tell us, is there a particular period in your home loan when you should actually consider transfer, and a particular period when it probably doesn't make sense to transfer your home loan?
Absolutely. So the interesting thing about any bank loan is the bank always tries to recover the interest fee, right? Which is their real earning on the principal amount initially, all right, at the first few quarters, all right? And as you go closer to the end of your loan tenure, then you're essentially paying off your principal amount, right? So whenever you have, let's say, an interest rate advantage at a different bank initially in your loan, let's say 12 to 18 months through your successful repayment of the first loan, you can actually look at a balance transfer. That's a good time to look for a balance transfer.
First 2 to 3 years? So, right, if you want to switch your loan, look at the cost-benefit ratio. Look at the costs that you will incur and look at whether it actually is going to help you, whether your EMIs are actually going to go down to, offset the costs that you're going to pay upfront. Also, switch a home loan if you are in the earlier part of the loan, in the first 2 to 3 years. After that, it may not make that much sense. Moving on to our next query, Avanti writes in, she asks whether it's better to go for a home loan with a lower base rate or with lower margin. That's quite an interesting question coming in.
Right. So let me actually first decode the two terminologies here. So base rate is a very transparent rate that the bank publishes. It is the rate at which it says it is open to lending money, right? The margin or let's call it the spread on top is where the bank really earns money, and that's not a very transparent rate because that's a function of your income, your credit profile. So it is very specific to that customer.
So
it doesn't.
Essentially, the interest rate that I'm paying on a loan is base rate plus the spread.
Absolutely.
And how much would the spread be?
Spread depends from bank to bank. Typically, it is around 0.5%. But what's interesting to note is when you have Bank A giving you, let's say, a loan of a base rate of 9% and a 1% spread, and you have a Bank B giving you a 9.5% base rate and a 0.5% spread, it's always better to go for Bank B. The reason being that they're already on a very high base rate, right? And as RBI decreases the interest rate, they will have the pressure to get the 9.5 back to 9. So your end interest rate will be automatically 9.5%, whereas the Bank A still remains at 10%. So always go for a loan which has a lower spread.
And where do you get the spread? Is it there on the bank websites, or will the bank personnel tell you what is the spread that they're charging?
So typically the bank loan agreement has these details.
Right.
You will be able to
So
find
read your bank loan and go for the bank. Opt for the bank that gives you a lower spread, vis-a-vis a lower base rate, because base rates are periodically reviewed. That's a key takeaway coming in for you there. And we also saw a lot of banks, including a leading public bank, which actually increased the spread and lowered the base rate recently when the RBI cut rates, right? So look at the spread there. Another query coming in now via email. Uday writes it to us. He says that he bought a BDA approved e-Khata land in Bangalore by making the payment in cash. He is now looking for a home loan to construct a house. But banks are saying that they will give a loan only after 20% construction is completed. He is now looking for a loan. He wants a loan from the beginning of the construction. So is there any bank that gives loan to start construction? Do banks lend for construction?
Unfortunately, Uday, no bank will give you a loan unless the construction starts. So that's a key requirement. However, since you already own the property, by property I mean the land, you could possibly look at a loan against property. Depending on your ability to pay back the loan against property loan, you could actually fund your complete construction cost through that loan against property loan. It's called LAP in banking terminology. However, please do note that loan against property comes typically with a higher interest rate than a typical home loan, and also the tenure ranges from 15 to 20 years versus a typical bank home loan which can give you a tenure of 30 years. So do note those issues with a loan against property, but a loan against property should immediately give you cash to start with the construction of the house on the property that you've already purchased.
Do NBFCs give loans for construction? I mean, banks obviously do not, but do NBFCs or the cooperative banks and all, do they give these loans?
No, no financial institution will give you the loan unless the construction on the property has started. Now, that's a way for the institution to know that the construction will actually go forward. The reason why Uday has been asked for 20% of construction is because it further de-risks the bank. Towards non-completion of the project. That's the reason why. But again, you should look at NBFCs and cooperative banks, which would be open to taking on more risk. You can try that. Of course, that comes with a higher interest rate, a lower tenure, and a lower loan amount. So those are things to watch out for.
Right. So typically financial institutions, Uday, will not give you a loan to start construction. They will lend to you once construction begins. But do look for a loan against property if you're willing to go for a loan that has a shorter tenure and a higher EMI. Right. Next question. Sudeep has written in on email. He says his monthly income is 36,000 rupees. His mother's monthly income is 10,000 rupees. Now, Sudeep is 27 years old. His mother is 48 years old. Sudeep's working experience is around 2 years. Now, he wants to take a loan to build a home on a plot which is in his mother's name. Can Sudeep take this loan, and how much loan is he eligible for?
Sudeep, you can take the loan. The thumb rule is typically you're eligible for a home loan of 4 to 4.5 times your net annual income, right? Given your annual income, I think you should be eligible for anything between 17 to 19 lakhs. All right. So yes, you are eligible for a loan in the region of 17 to 19 lakhs. You will need to obviously have your mother as a co-borrower in the loan. Do note that since your mother is already about 48 years now, the loan tenure may be affected because she's also a financial borrower on the loan agreement. So, if you can afford the loan yourself and you don't want her as a co-borrower, you could have actually received a 30-year tenure. However, given that the property is in her name, I would recommend that you treat her as a co-borrower and go for the loan with her.
Does Sudeep's mother have to be working? I mean, she does have an annual income like Sudeep told us, but does she have to show the source of income? Does she have to be working or employed or something like that to be a co-borrower? And also, can Sudeep, then avail of tax benefits?
Sudeep can definitely avail tax benefits, and if his mother is a financial co-borrower, then yes, the income is going to go towards calculation of the eligibility of the loan and their, their propensity to pay it back. So yes, she will need to have that income going forward.
Right.
Right. One key thing to note is the bank may also ask you for an NOC, in case you have siblings, that in case going forward, let's say the EMIs are not paid on time, that the property can be repossessed and the siblings have no problem in having that happen. So that NOC will be asked for by the bank.
Right, Sudeep, that's your answer there. Yes, you can get a loan. You are eligible for a loan of 16 to 19 lakhs. Get your mother in as a co-borrower. That will probably up the loan amount. But if you have siblings, you might be asked to furnish an NOC. Okay, moving on. We have another question coming in via email. Rajat has written in. He says that he's residing in Ahmedabad. He works for a private proprietary firm and his annual income is 4.2 lakh rupees. He already has an ongoing home loan with a bank in Ahmedabad. Can he take another home loan for a property in Bhubaneswar? Possible?
Absolutely possible. However, the bank, right, will look at his eligibility for the overall loan amount, which means that if his net income is around 4 lakhs, he is again eligible for 16 to maximum 19 lakhs, right? Within that amount, he can take two home loans also. So if your first home loan is of a value much lesser than 17 to 19 lakhs, whatever is the remaining amount can be used for a second home loan. So let's say your first home loan was for 12 lakhs, then up to 5 to let's say 7 lakhs is what you can get the second home loan for.
Right. So that's you are eligible for another home loan, especially if your first home loan is lower than your eligibility. You just heard Saurabh say your eligibility should be around 16 to 19 lakhs. So if your first home loan is lower than that, you can definitely look for another home loan. With that, we have another question coming in on email. Hemal is asking, what are the due diligence steps involved in buying a mortgaged property? Now, the seller from whom she wants to buy has an outstanding home loan, and to top it, the buyer himself is planning to avail a home loan. What are the steps involved? This should be fairly simple, right?
Right. Definitely a lot of due diligence is required. First and foremost, you need to find out about the title of the property. It needs to have a clear title. There needn't be any liabilities on that property. So you need to do that. You may engage a legal counselor for this activity as well. The other part of it is it isn't possible for you to just transfer the loan from one person to another. The same loan cannot be transferred. So the first loan needs to actually be settled fully, and then a new loan can be taken. What I would recommend strongly is just see if you can take the loan from the buyer's bank, from actually the seller's bank. It's fairly more convenient, and also you might get a lower interest rate. However, it will be a fresh loan. So the tenure of the loan, the rate of interest and everything will vary from the first loan.
Right. But then they can take a loan. It's
Absolutely.
a fairly straightforward process. And I think a lot of home buyers who are buying on resale typically get into such kind of transactions, right?
Absolutely, absolutely. Just that you should do your due diligence. You should also question the seller on why they're looking to sell the flat or the property while their loan is still on. Do any and all due diligence that is possible. And if everything is clear, then I highly recommend that you prefer the same bank that the seller is using, if possible. If it's actually an approved property, then it makes things even easier, but it will be a fresh loan.
Right. So that's a nice hack coming in there. If you're buying resale property that is already mortgaged, go for the same bank that your that your seller has a loan account in, because your property is already pre-approved over there. That will save you a lot of paperwork and a lot of running around. Okay. Moving on to our next query, Rakesh Kumar writes in. He says that he's an NRI based in the UAE. He wants to buy a home in Ludhiana. He wants to avail a home loan for the same. Can he get a home loan? His income is 80,000 rupees per month.
So any NRI or in fact PIO or OCI, person of Indian origin or an overseas citizen of India can avail of a home loan, provided that you use typical banking channels to pay back the loan EMI in Indian rupees. However, do note that banks have certain other requirements, right? For let's say a salaried employee, you may be required to be in your new country of residence for anything between 6 months to a year before you can avail of the loan. For a self-employed professional, it could be anywhere between 2 to 3 years. Also, some banks may expect you to have minimum educational qualifications.
Okay.
You could be needed to be at least a graduate or a postgraduate. Also,
Right.
in such cases, the home loan is normally of a tenure which is lesser than for somebody who's a resident of India and applying for the loan in India.
Right.
So your loan tenure will actually vary anything between 15 to 20 years, not beyond that. Your loan amount though can vary between 5 lakhs to 5 crores depending on your
Right.
income, and you may have to have a minimum annual income which could range between 2 lakhs to 12 lakhs. So you will
2
need
lakhs to 12 lakh minimum annual income is what you'll need. But yes, you can take a home loan. Doesn't matter if whether you're an NRI, whether you're a PIO, you are eligible to take a home loan. Let's move on. We have our first caller of the evening. I'm told, hello.
Hello.
Hi, welcome to Property Hotline. May I know who's calling?
Kavita ma'am, good evening. Niranjan Bala, I'm calling from Delhi.
Good evening, Niranjan. If I'm not mistaken, you have called us earlier.
Yeah.
How are you and what's your question today?
Fine, ma'am, fine. My question is,
Yeah.
I had taken loan.
Hmm.
I had taken loan, and that it is above the base rate. Now, if I want to switch over to the base rate, how much it will charge, and whether it is a beneficiary or not, and the term loan the period will be less or it will remain same.
Right. Niranjan, can you help us with some basic details? How much loan did you take? At what rate of interest are you paying your EMIs on?
Yeah. I took loan for 20 years, and 3 years before I had taken.
Hmm.
And that time I had taken loan for 0.40% above the base rate.
No. So what is your interest rate?
9.7%.
9.7%, and he's 3 years into his home loan. Should he switch now?
Could you just help me again with the amount, the loan amount?
Loan amount, Niranjan, very quickly.
Loan amount is 60 lakhs.
60 lakhs.
I think the loan amount itself is fairly large, and the tenure has just started. Today, the interest rate for typical home loans in the market stands at about 9.55.
Right.
And
so
his
it
loan
makes
is
sense
at,
for him to.
it could possibly make sense because his advantage of 0.2% will be spread over the next 20-25 years. So I would imagine it will make sense. However, I encourage you, Niranjan, to do a proper calculation and find out for the new bank, right, who is ready to give you a balance transfer,
Right,
what are
right.
their processing fees, what are their legal fees, what kind of
Right,
stamp duty.
Niranjan, we had answered this question at length earlier in the show. So if you were seeing the show, you would know what to look for. But yes, the answer is that it makes sense for you to switch your home loan. I'm really sorry to cut that answer short, but we are completely out of time on the show today. Thanks a lot for calling in, Niranjan.
Oh, okay. Thank you.
Thank you so much, and thanks a lot, Saurabh, for joining and
Thanks.
breaking down home finance for our viewers.
It's been a pleasure. Thank you so much.
Pleasure having you on the
Thanks.
show. With that, time for a wrap on today's show, Property Hotline. On Friday, we'll be back with another expert who'll answer all your questions related to buying, selling, and investing in property. Also, do not forget, if you're living in Mumbai and if you are looking at redevelopment for your building, we will be doing a special of Property Hotline on redevelopment projects coming Tuesday, where we will have a lawyer in the studio to answer all your legal queries regarding redevelopment. Be sure you tune in for that and send in your questions for the same. Till then, keep watching Magicbricks Now.